Hello, trading friends, and welcome back to Forex Focus, brought to you by IG. Taking a look at the stock market, crypto market, both near all-time highs as U.S. inflation coming in as expected, but moving lower, which has been deemed a good thing, at least in the short term. We'll see where all these markets end up when the smoke clears and the dust settles. But for the time being, strong stock market, strong Bitcoin market, U.S. dollar back and forth, a bit of a mixed bag. And we'll get to that as well as U.S. interest rates in today's show. But let's start with the stock market, as it did reverse a little bit off of its all-time highs earlier in the week. But after this inflation number came out, significant bounce in the S&P and NASDAQ, and some of that went away later in the trading session. But as you can see here, right back near those all-time highs around 5,100. S&P index has been above 5K now for a handful of trading sessions. And these are really those all-time highs in the S&P. And as you can see, they've made a couple of them this year. Now, where is the Bitcoin market at? Close to those all-time highs, not really through those all-time highs like the S&P, but moving pretty vigorously to the upside. And now there's not necessarily a ton of correlation between the stock market and the Bitcoin market, especially of late. Crypto has really been doing its own thing here in 2024, but you can't help but see, especially if you looked at maybe like a 15-minute chart around this most recent PCE inflation number, you saw a pretty significant rally in both these markets after inflation came in lower. And that makes sense for a number of reasons that we'll illuminate in the next couple of minutes. But yeah, right now, Bitcoin's rally through 60K even. A lot of people wondering if we're going to see that new high that is, less than $5,000 or $10,000 away. Or obviously this market has traded with great velocity to the downside as well. We'll see what happens there. And it could be dependent on some of this data that we've been getting and the future of the interest rate environment in the U.S. and globally as well, obviously, but primarily a lot of eyes on the U.S. inflation story. And PCE was the most recent inflation number that came out of the U.S. It's PCE and CPI, the major inflation measures in the U.S. And you'll remember that CPI came in a little bit higher than expected. PCE came in as expected, which you might think net on net, oh, okay, well, it came in as expected. How good could that be? Well, it was lower for another month in a row, and it's been several months in a row where the year-over-year inflation rate has been moving lower here in the U.S. Via the PCE calculation. And a lot of people were thinking going into this that, oh, if CPI was higher than expected, then this PCE is maybe going to jump up as well. It looks like from a broad point of view, obviously, inflation is moving in the lower direction. And remember that the central bank here in the U.S., the Fed, wants inflation at a 2% target. That's their long-term target. And the way that they usually get inflation down to a 2% target when inflation's high is they'll increase interest rates. And you'll probably know that interest rates have risen a lot in recent years. And they're right now sitting at around 5.25% to 5.5%. That's the current range. The Fed will usually keep interest rates in 25 basis point ranges. And here you have the distribution of where rates are likely to be as of the June Fed meeting, which is a few months out, but is has been the first one that the market is really seeing significant chances of a rate cut. March, there is a meeting in March, but looking like they're not going to cut. There is also a meeting in May, which is, depending on when you look, it's been around a 20 to 30% chance of a cut here. the distribution is showing about a 35% chance of being the same in June, so a 65% chance of rates being lower at the end of the June meeting. And so I roped this in because there's been some fear, especially after that higher inflation number with CPI, that maybe they price out even a rate cut in June. Maybe they start to price out rate cuts at all in 2024. And so some of those concerns of inflation resurfacing, interest rates staying high or even moving higher, have been quelled a little bit here in recent trading. Now, of course, any of this stuff can change. We've got U.S. employment data coming up. We've got more U.S. inflation coming in March before even the March FOMC. These things will shift around for sure. But in the short term, seeing stocks make highs and crypto get back to its highs. And remember that though those markets aren't the same asset class and they're not necessarily the most historically correlated, there's a theoretical case to be made that lower interest rate environments can create both growth in a space like the equity market and the crypto market, but also maybe free up some cash for people to invest more in those markets as well. From a liquidity standpoint, tend to be more liquid when interest rates are lower. We'll see where that story ends up. The US dollar piece of it all has been really, really interesting, right? Because even if, if interest rates in the U.S. are going to stay high for longer or move higher, then that might be indicative of a stronger U.S. dollar because people want U.S. dollars to invest at that higher interest rate relative to a euro at lower interest rates, especially if the euro area might cut interest rates and the U.S. doesn't. Now, on the flip side of things, a lot of people have been making synonymous the two ideas of interest rates moving lower globally and U.S. dollar seeing bearish activity moving lower with that because the U.S. dollar rallied as interest rates rallied globally, and now it has to fall as interest rates fall globally. One, interest rates haven't fallen yet in any of the major economies, aside from China, but that's a whole different story. But two, keep in mind that especially for a euro market where they hiked interest rates up to above 4%, the U.S. is above 5%, and some of that dollar strength in recent years is because of stories like that. The U.S. doesn't have to cut much more than the euro area. There's a scenario that theoretically interest rates could move lower by 100 basis points in the euro area this year and by 50 basis points in the U.S. And so maybe some U.S. dollar strength. And so this is to say a lot of different things could play out here. And you might have expected, and I would have expected from a theoretical standpoint, lower inflation in the U.S. today, lower chances of or greater chances of lower U.S. interest rates, and so that U.S. dollar might take a dive today. It's actually strengthening today against the euro, and the euro's back below 108. So could be a flight to quality, could be, like I say, even if rates are moving lower, stronger U.S. rates relative to the euro area. Maybe they're priced in, they're going to cut faster or further than the U.S. A lot of stuff at play. No one's even cut yet. So we'll see where future inflation readings are. There's employment coming out of the U.S. There's inflation coming out of the U.S. soon, and where that moves around interest rate, forex markets, as well as stock and crypto and everything else. Thanks for watching.